Welcome to Mobick Explained, your gateway to the Mobick ecosystem. Stablecoins have become a frequent topic of discussion in the Mobick community. The project team is planning to partner with a financial group to issue a stablecoin based on the US dollar. In this video, I'll explain the background and potential scenarios that could unfold in the months ahead. As you know, the current dollar system originated with the Bretton Woods Agreement in 1944. This agreement established the US dollar as the world's primary reserve currency pegged to gold, while other currencies were pegged to the dollar. This arrangement gave the dollar a central role in global finance, but it required significant changes in the decades that followed. In 1971, the U.S. abandoned the gold standard under President Nixon, effectively ending the Bretton Woods system. Known as the Nixon shock, this transition moved the dollar to a fiat currency, with exchange rates shifting to a floating system. What triggered this change? It was the Triffin dilemma. In the 1960s, economist Robert Triffin highlighted a key conflict for a country whose currency serves as the global reserve currency. To meet the global demand, the issuing country must run trade deficits to supply its currency worldwide. However, these persistent deficits undermine confidence in the currency's value. Under the Bretton Woods system, the U.S. had to ensure that dollars were convertible to gold at $35 per ounce. But countries like France, holding large reserves of dollars, began questioning whether the U.S. had enough gold to back all dollars in circulation. They started redeeming their dollars for gold, causing a rapid depletion of U.S. gold reserves. Facing a potential collapse of the system, Nixon had no choice but to end the dollar's direct convertibility into gold in 1971. Was the problem solved then? Not exactly. It only delayed an inevitable reckoning. Even a superpower like the US cannot sustain the dollar's dual role as both a domestic and global currency indefinitely. The U.S. manufacturing sector has largely eroded. Industries like automobiles, semiconductors, and consumer electronics are now dominated by Asia. This has negatively impacted U.S. workers, particularly in the Rust Belt, where cities have collapsed and economic hardships have led to issues like alcoholism, drug addiction, and family breakdowns. Many of Donald Trump's staunchest supporters come from these areas, and they demand the return of manufacturing to U.S. soil. The new Trump administration is aiming to turn trade deficits into trade surpluses. However, achieving this would mean the dollar could no longer serve as the global reserve currency. Dollars from abroad would return to the U.S., causing a dollar shortage in other parts of the world. This would make it harder for countries and corporations, especially in emerging markets, to repay dollar-denominated debts, potentially leading to defaults and financial instability. In such a scenario, alternative currencies or systems may gain prominence, and this is where digital alternatives enter the spotlight. In the crypto sphere, two primary candidates could complement the dollar system: Bitcoin and dollar-based stablecoins. Bitcoin has potential as collateral in global trade. But let's face it, currently, it lacks mass adoption. Stablecoins such as USDT or USDC are more practical for merchants, functioning like dollars and enabling smooth cross-border transactions. In countries with hyperinflation such as Nigeria, Turkey, or Argentina, people already depend on stablecoins to protect themselves against fiat debasement. I bet the light bulb is going on in your head. You are starting to see real use cases of crypto. the movement of money and the settlement of money. You might wonder, would Washington allow stablecoins to proliferate? According to Mobick's founder, the answer is yes. Trump's administration needs new buyers for U.S. Treasury bonds since China's Xi Jinping has stopped purchases. Without these buyers, the U.S. government risks default as printing more greenbacks is no longer a viable option. Stablecoin issuers like Tether or Circle back their currencies with dollar-denominated reserves such as U.S. Treasury bonds. By holding these reserves, they increase liquidity in the Treasury market. Additionally, stablecoins expand the dollar's reach into the digital economy, facilitating global use. This aligns with the U.S. interest in maintaining the dollar's dominance. Just as the U.S. allowed the euro-dollar market to thrive in the past, Washington is likely to take a similar approach with stablecoins. The euro-dollar market, which is U.S. dollars held offshore, operated outside direct U.S. regulatory control, but reinforced the dollar's global dominance. Stablecoins represent a modern parallel. By holding U.S. treasuries as reserves, both Tether and Circle strengthen demand for U.S. government debt, keeping borrowing costs low and enhancing the dollar's position in global trade. This lucrative market has already attracted many players. Tether reportedly made over $10 billion in profits in 2024, and companies like Ripple and PayPal have launched their own stablecoins. For Mobick, the path forward is clear. Find a reputable and credible partner. Can Mobick compete with USDT? Absolutely. Imagine Mobick launching its own stablecoin. Let's call it Mobick Dollar, MBD. Holding MBD in your wallet rather than on an exchange could earn you daily yields. The interest rate could be higher than what centralized exchanges offer. Lessons can be learned from Terra's rise and fall. The now defunct Anchor protocol promised 20% APY for staking Terra USD or UST, which was way higher than other stablecoin returns in the crypto market. This attractive yield drew a large number of retail and institutional investors seeking stable passive income. With virtually unlimited public resources, Mobick stablecoin can offer even higher yield while avoiding risk to collapse by being backed by real assets, not algorithms. Terra built a robust ecosystem, including payment solutions like Chai in South Korea, which integrated UST for real-world transactions. Its expansion into DeFi, NFTs, and partnerships boosted utility and investor confidence. If Terra had not relied on algorithms, it might have surpassed USDT. By emulating Terra's successful strategies while avoiding its pitfalls, Mobick has a real chance to disrupt the status quo. I recently came across a quote about wisdom. Knowledge is knowing that a tomato is a fruit. Wisdom is not putting it in a fruit salad. It's deep, right? If I may adapt it slightly, knowledge is knowing what Mobick is. Wisdom is not seeing it as just another chance to make money. Who knows? One day, your mom might pay for groceries with a stablecoin on the Mobick blockchain. And the day might come sooner than you think. Stay tuned and stay excited. Mobick Probe signing off.